Last night's housing announcement, which Eamon referenced there, has pushed mortgage rates below 6% today to hit their lowest level in nearly 3 years. They're 5.99, as you can see. Let's dig a little deeper into the president's proposals now with Bill Pulte. He's director of the Federal Housing Finance Agency. Bill, it's great to see. I was almost going to give you a pop quiz. I mean, is that about the level you think that mortgage rates should be after this announcement?
Well, you know, I don't want to comment too much on price action, but I will say this. We finally have a president that knows that Fannie Mae and Freddie Mac exist. We have all of this cash. Why not put it to work? Why not put it back in great mortgage bonds that we have? And it's great to see that the action happens today. You know, this is a president that is laser focused on getting housing affordability back. And we're going to take any tool that we can that makes sense. The president's about to announce a couple other things, Kelly, in a couple weeks at Davos. So stay tuned for that.
All right, we'll get to that. $200 billion. Bill, why not make it $1 trillion? In other words, these agencies could do more. In the past, they have done more. And we're wondering whether we're preparing them for an IPO where this risk would potentially be put onto investors, or looking to keep them in the hands of the government where they could become a tool of these kinds of policy moves.
Well, $200 billion is a lot of capital. This is a very big buy. We're very excited about it. We've already begun executing upon it. I don't want to talk too much about how we're staggering it or what we're going to be doing, but this is also in the best interest of the American people, and it is in the best interest of the Fannie and Freddie team as well. Because why? These mortgage securities actually yield a higher result, and we feel very confident in the mortgage underwriting standards that the companies have post the Great Recession. Under President Trump, we are running Fannie and Freddie like businesses, and that's why we have the flexibility to do this and feel very confident that it's going to be safe and sound while also having the effects, like you said, of lowering mortgage rates. I mean, to be in the 5% range and half of the 5 handle, that's huge, Kelly. Nobody thought that was possible.
You know, we know these levels are psychologically important, but so you are preparing these agencies to go public, and you think that directing them to buy more mortgage-backed securities is consistent with that. But if it's good business, why haven't they been doing it already?
Absolutely. Well, that's a good question. Why haven't they done it already? Why didn't the Biden administration put everybody years after COVID and order them back into Fannie and Freddie's offices? Why did the Biden administration have so much inflation? I can't answer these questions. I can just tell you we have a president who is a commander-in-chief, but as a builder-in-chief, he is laser focused on housing, Kelly. We're going to keep housing prices high, but we're going to make things more affordable. And that's what the American people voted him in for. And you see that today with the mortgage rates being with the 5 handle. This is a very big deal. This, coupled with the ban on institutional investors buying, which I believe will happen, this is going to be very big. This is a big 1-2 punch this week, and there's more to come.
One more, and then I'll move off of this topic. But there are many on Wall Street who are somewhat confused because I've seen reactions that say, oh, obviously they're not going to IPO these companies now. Obviously the president is pleased that they haven't done so. And yet you're saying that this is part of a plan to IPO them. And I wonder if that's because you want to make sure that the losses go on to investors and not onto taxpayers if anything, you know, goes wrong. But can you just clarify the intentions? This is definitely an effort, even though they're being kind of marshaled to support a policy initiative.
I didn't say that.
It's part of an effort to take them public?
I'm just saying that they're not. I'm just saying that they're not mutually exclusive. You can take them public if the president decides to do that, and it may actually help the IPO. And you can also look out for the American people. So it's a good use of cash, and it helps the American people. It's a very good thing as far as I'm concerned.
Yeah, and as you mentioned, Bill, there's been so much on the housing front this week. I noticed your tweet yesterday, a post on X. What would it do to say to the builders a little bit more of a tit for tat? In other words, we're talking right now about a move that would lower mortgage rates, and some say push up home prices. But there's other things going on here as well, which is to increase supply, right, which helps with all of this. But this suggests that you guys want builders who do business with Fannie and Freddie, which implicitly is kind of everybody, to increase supply. Can you talk a little bit about how that would work? And by the way, all the builder stocks are flying today. They all seem to be excited that these moves are going to do more and better for their business. But how exactly would something like this work?
It will help, but the builders need to do their part, and they need to do their part also from a safety and soundness standpoint. The builders have 2 million lots, if you can think about that. 2 million lots. Now, a lot of people say, oh, well, some of it's optioned. Last I checked, option meant controlled. So they can control it. This is entitled land that they can put into production. We need them to put it into production. And part of the reason we need them to put it into production, frankly, Kelly, is because we want to make sure that people are accurately reflecting, if they're going to be doing business with Fannie and Freddie, that they're accurately reflecting the inventory value of of the land on their balance sheets. And so we want to make sure that they're churning through that inventory, and it also happens to help the American people. So there's a lot of different reasons that we want it to happen, but if you're going to do business with Fannie and Freddie, you really need to look at your lot supply, and action may be coming on that front.
I'd love to broaden this out, and I think that David Zervos has really illustrated the broader thing that could be going on here. And traders understand this. I mean, look at the reaction last night. They pushed bond yields down. They were pushing mortgage yields down and spreads down. Obviously, they understand, as Zervos has said, that now you don't want to fight the Treasury. It's not don't fight the Fed. It's don't fight the Treasury. He's even gone so far as to call all of this trumpetative easing, or TE, because it's like quantitative easing, but, you know, the president's version. And he's also said on a note this morning that this is like mortgage QE. So can you talk more broadly about all of these goals, including the Treasury Secretary, who's talked about the Treasury buying long-term securities to bring rates down a bit? How big is the vision here, and how much coordination could there be between and amongst all of these industries to bring rates significantly down on both the Treasury and the mortgage aspect of this?
Well, the administration is working very close together. Both Secretary Bessent, Secretary Lutnick, Secretary Turner, Kevin Hassett, Vice President Vance, Susie Wiles. We are all working as a team. This is an all-hands-on-deck effort to get mortgage rates down, to get affordability back into the housing market. I can say, in terms of my lane and what Fannie and Freddie has, we have a president who understands that we want to keep home prices high. It represents a lot of people's net worth. At the same time, we need to make it more affordable after these last 4 years of inflation. So you say don't fight the Fed. I say don't fight Trump, because if you fight Trump, you're going to lose. Yeah. And so we're really fighting for the American people. Trump is fighting for the American people. And all these companies, they can have a great business, they can have a great free market, but they can't rip off American consumers. And that's what we're focused on at U.S. Federal Housing, is making sure, whether it's the credit bureaus, the title insurers, the mortgage insurers, everybody needs to create a competitive environment where we're not ripping people off like it's happened the last 4 years.
No, I think that's exactly what Zervos and the trading community and others are picking up on, is that the kind of Treasury is the new Fed. They're doing all of these things using their resources instead of kind of through the Fed channel. Anyway, that's kind of a theoretical thing on the side. But a point you've made a few times, Bill, is you want to keep home prices high. Understandably, you don't want to hurt the equity that existing homeowners have while making it more affordable. I'm trying to think of what other options that really leaves, other than like a 50-year mortgage, which I've heard may not help that much at the margin. Even this move, look, we've seen sometimes with QE in the past, it brings down mortgage spreads and then they widen again, or maybe this is 5 or 10 basis points on the margin. So it's hard to achieve both of those goals at the same time without kind of like over leveraging households.
I don't necessarily agree. I think,
options are there? Like you mentioned the announcements that might be coming. I would love to know if you can give us a hint of what other announcements may be in store.
I think what you said would be true if we had a Joe Biden or a Barack Obama or George Bush as president, but not President Trump. President Trump understands how to build. He understands how to build at a low cost. And frankly, you look at the ban on institutional home buying. That is a home run for the price of new homes. I mean, you have a situation where institutional buyers were buying homes for 20, 30, in some cases, 40% less than the American consumer. That's crazy. We can't let that happen. And so I do think that you can keep home prices high. You can also make sure that the builders are building affordable products for people and not corporations. And I really think it's going to work out well. And look, we've changed the entire momentum of the housing market this week. You had the ban on institutional home buying. You have Fannie and Freddie doing what they're doing with mortgages. And as I said, wait a couple more weeks for Davos.
All right, 50-year mortgages, 40, 50. What else? What are the other things?
There are a lot of other priorities.
Could you change capital gains tax on making a home sale? I've heard that one could potentially help people. You're trying to get people out. This is ironically a little bit out of their homes too, right? We got to get the inventory of the existing homes into the market.
Well, we're trying to look at everything, and we are looking at everything. We've presented the president with anywhere between 30 to 50 different options. This has to do with HUD, Treasury, Commerce. Everybody has come to the table. It'll be up to the president to decide which, if any of those, he wants to do. But look, this president is about action. If you bring him a good idea and he likes it, boom, he gets it done. There's no more talk from, these politicians on Capitol Hill who complain about institutional home buyers. We're going to do something about it. This president is doing something about it.
Bill, thank you for joining us, and keep us posted. Tell us ahead of time if you can. But we really appreciate your time today.